Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 23rd of November. Right, just a bit of a quick early update. Not a lot of activity or direction here, clear direction in the US equity markets. Once again, the Treasury bonds sort of just whipping about. They've bounced back quite aggressively. The yields have, but now the dollar continues higher, right? So now there hasn't been a lot of data since yesterday. I've seen what's going on as far as the news. Now, let me just give you a quick look at that if you're missing it. Now, the Powell's renomination, okay, as chairman of the Federal Reserve is a positive for the dollar. You've also got that lingering situation with the sort of bit more of a lockdown spread of the COVID across some areas of Europe. Now, that's still developing, right? And the media are all over this. They will blow it up out of proportion, you can be sure. And at the moment, so just with that, trying to rebalance and work out where that dollar is and what it's doing. Well, it is going up and the dollar block is going down, whether that's the Treasury bonds. I think it's just a culmination of a weak euro, strong dollar outlook. Okay, the core fundamentals of the dollar are good. The dollar index is going up. Once again, dollar Swiss is starting to chime into the top side. Now, just be careful with dollar yen. Dollar yen is back up, but you're getting these massive clear outs, like these 100-point moves, and that just sort of corrected yesterday. Dollar CAD looks set for the top to continue to the top side. As long as oil keeps falling, heading back towards $70, that's got to be a chance. Now, the US did, I don't know whether they put some pressure on Japan to release oil reserves. That's really done a bit to dent the oil price. And as you can see here, to start the week, euro just drifting lower. Sterling, well, it's trying its best to go lower. And Aussie and Kiwi, well, the downside looks set for those pairs. Now, coming into today's trading, right, don't expect a hell of a lot, probably through the Asia session, unless we get some sort of random news. There's some Aussie data out here, right? This data here is inconsequential. In some of the bigger economies where manufacturing and et cetera are big, they come into play, but not in the Australian economy. So don't get yourself all excited about that. What you can get excited about is the range of PMI data, obviously some in the Eurozone and then across the UK, right? Ideally, with the way momentum is at the moment, the dollar going up, we want weak numbers here. Weak numbers feed into that those weaker currencies, and that's where I can see the best opportunities coming. And outside of that, you've got some of those manufacturing PMI numbers out of the US as well. So Eurozone, sterling, the dollar really points to sterling and euro as the two most likely pairs to be trading. I think euro, like sterling, got a bit of benefit from Europe potentially shutting down some areas with the pandemic. If that spreads to the UK, then sterling's going to fall very quickly. So just make sure you're aware of that. Outside of it, it's business as usual. The dollar is just drifting lower, and that's what the cards are telling us. All right, guys, have a good one. All the very best. Cheerio.